Hello all and welcome to the FinTech Finance Virtual Arena where I'm hosting you here today. In this special arena, we're going to be discussing banking and Hong Kong and also the Chinese financial sector industry with none other than Andy Nam, CIO of Hong Kong and Greater China from Standard Chartered Bank. So Andy, for our viewers, could you give us a bit of an introduction to yourself and your role at Standard Chartered, please?
Sure. Thank you very much. First of all, thank you very much for inviting me. This is my great honor to be here. Currently, I am working for Standard Chartered Bank as the CIO for GCNA, which is a Greater China and Northeast Asia region, as well as the Hong Kong. So Hong Kong CIO. So my current portfolio is looking after Hong Kong, China, Korea, Taiwan, and Japan at this point.
Wow, that's quite an expansive remit. With that in mind, having that knowledge of financial services in Korea, Singapore, Hong Kong, and mainland China, what do you think have been some of the biggest changes when it comes to financial services? Do you think it's been a cultural change, or do you think it's been more of a technological change?
I think it's a little bit of both, especially, the people realize that, the IT or, the technology is a very, very critical, for the bank, as well as, the helping out the clients and customers. In the past, the IT systems or, technology are very much seen as, the support function. Now, all the clients, customers are actually very adopting rapidly the digital as well as all the great the technology from their end. So without having the right technology, right investment, right innovation, we are struggling to actually meeting their expectation and serve the clients and customers in the right way. So we are always putting the technology in our the core competency capabilities in moving forward.
Speaking of Standard Chartered as a financial institution, it's so worldwide, it's so global. I mean, does that give you a remit to take what you see in, for instance, Hong Kong, in Singapore or Korea, and import it into Hong Kong and China, and vice versa?
Well, I think the world as a general is especially the Standard Chartered Bank. We are serving the Asia and Middle East as well as Africa. We are very, very fortunate. We are serving great diversified our clients and customers with all the great technologies to leverage. So actually, from a Standard Chartered Bank perspective, we are learning each market. From each market, so that we can improve ourselves to provide the better services to customers and clients as well. So from the you mentioned Singapore, Hong Kong, Korea, and China, we all actually try to create a synergy among ourselves as well.
Excellent. And there's a lot of talk about Singapore and fintech. Hong Kong still has that traditional institution base. What role do you think Hong Kong and mainland China can provide financial services going forward into maybe the next 2 years?
Well, I think Hong Kong has been a great, well positioned in terms of fintech and innovation. Government has been very, very supportive, and as well as driving the innovation as well. Currently, the Hong Kong has around 550 fintech companies in Hong Kong, which more than half, 50% are founders are from overseas, not from Hong Kong.
Wow.
So meaning, the Hong Kong is one of the few the places of the world that actually connect or attract the fintech companies from both East and West. So I think it is a very, very well positioned, from that sense. At the same time, as you are aware of, the Hong Kong is the third largest, the financial hub and the Asia's the biggest the financial hub as well. So it will be a fantastic opportunity moving forward to promote all the innovation activities in here.
Excellent. And obviously, as we've mentioned, your role transfers also onto mainland China. And I think when it comes to financial technology, everyone gets very excited about what mainland China can provide. That's where I first saw my first glimpses of fintech, being able to access funds on WeChat. Or book trips using Ctrip. So, I mean, what insights can you provide me about mainland China? It's still very much cash based, but obviously the adoption to QR has been very successful. What do you think is going to change in the future that might excite my viewers?
China has been amazing, actually, in terms of adopting new technology and especially in terms of a mobile payment area. I think in 2017, even back then, there are more than 75% of the Chinese people wanted to use digital currency, prefer to the cash itself.
Wow.
So now in 2020, China is the world's largest, the mobile payment market, which is around the 25 trillion, dollars. Of course, the 90% of the 25 trillion dollar, being provided supported by Alipay as well as WeChat. But it is a very, very amazing country in terms of adopting the new technologies. So that's a one area, and the other technologies, newest technologies like the AI, 5G, IoT, and all the face recognition. Those things very, very rapidly the adopting the China. I'm very sure that China will be the contributing significantly to our world's the financial market moving forward.
Definitely. And being a CIO of Greater China and Hong Kong, we always talk how the data in mainland China and Hong Kong is so much richer than anywhere else in the world because of obviously the laws in place that you can pull so much more data on people. So can I ask, what interesting changes have you noticed in customer behavior when it comes to handling their finance?
Well, there are a couple of things actually. Interestingly, the recent COVID-19 pandemic situation actually, give us sort of an opportunity that the people realize that we need to use a more digital way of working, as well as especially for banking. People need to do more in banking transactions in digital way to support those the new sort of normal China, Hong Kong, as well as not only China, Hong Kong, the Standard Chartered Bank. We are trying to use our data as much as we can, so that we can provide all the customized, the customer specific the needs based product and services, so that we can support and help our customers, clients better.
Brilliant. And this significant move to digital adoption in Hong Kong, what does that mean for financial services in the Greater Bay Area? I often hear the phrase it's almost double the size of the Silicon Valley. What does that mean for Standard Chartered and your role being in that huge, very vibrant ecosystem?
A Greater Bay Area, or GBA, which we call, is very, very huge opportunity for us. From the region perspective, we are very sure that it's going to be a big engine for us moving forward. The population of 70 million, which is the huge number. Hong Kong population is around 7 million, so it's more than 10 times of the Hong Kong size.
Yeah.
GDP wise, 1.3 billion, which is very much similar to like South Korea at the GDP. So it's a huge opportunity for us. Standard Chartered Bank is working on planning to set up a customer solution center, which is we like to put our innovation and co-development and all the great tech capabilities into GBA region, so that we can now support and provide our great services to our GBA, GCNA region, customers and clients moving forward.
And Hong Kong obviously now has the virtual banks as part of the ecosystem. What does that mean for Standard Chartered? Does it give you a chance to really start to innovate faster than perhaps you had done in previous decades?
Right, there are a lot of actually challenger banks in going on across the world. The Standard Chartered Bank, we like to disrupt rather than be disrupted. So
Nice.
that's why we applied our license, virtual bank license, a few years back, and then we obtained the license. We are currently working on to launch virtual bank in Hong Kong, which we call MAPS. Inevitably, there will be some competition between our the virtual bank and our Standard Chartered Bank retail business. However, we believe that it's going to be a healthy competition, and then we will learn each other a lot. And I think it will be eventually it will be a very very good benefit to our customers and clients moving forward. Standard Chartered Bank, as a mothership, we will continue to invest on our retail bank, since it is one of the core businesses of the Standard Chartered Bank of Hong Kong. So we will continue our effort, putting our efforts in Standard the retail business as well.
Absolutely brilliant. We actually had Dennis Gouven, the CEO of Mox Bank, on our show a couple of weeks back. It was very exciting to hear what his views were on having that kind of dynamism between the mothership, as you called it, of Standard Chartered, but also that way to be able to innovate. So that's very exciting. And looking to the future, where is fintech going in Hong Kong? And where do you think the institutions will be in a couple of years?
Well, I think the Hong Kong fintech will continue to be strong. As I mentioned, there is a great location, the benefits, as well as there are a lot of great support from the government, from the institutions, as well as public and private sectors, and so on and so forth. So I think it will be continue to be grow. The Standard Chartered Bank, the Hong Kong is one of the very very critical markets, in terms of the bank's perspective. So we definitely like to be part of the growth the story. So we will continue to invest on our the Hong Kong business in the moving forward.
Absolutely excellent. And I've got to ask, we've talked about it briefly, and I didn't want to talk about it too much, but obviously the pandemic has changed the way that people interact. As you said, we're seeing more people interact digitally. Do you think that's only going to exponentially increase mobile usage as well as using card, or do you think cards in China and obviously to a lesser extent Hong Kong will take a back seat, or do you think there is a role for card payment in Hong Kong and mainland China? I
think it will drive the actually the every single different areas. Sure. Not only just card, the payment and etc. I recently see, the not only just the individual, customers that, they trying to use, digital, but also a lot of, the big corporate clients are trying to adopt, digital and the internet technology as well. The historically, the individual customers are, more a little bit faster in terms of, the digital adoption, but the corporate, they, sort of is slower than the individual.
Yeah.
But now, I can see, a lot of, the big changes from their desire to, the adopting the digital. So I guess, this pandemic situation actually will bring us, the more digital transformed society moving forward. Not only just cards and payment, but also very different areas as well.
Excellent. And lastly, just to wrap up, if you could give your, in a very short summary as to why Hong Kong is the best for fintech, well, at least leading the way. What is it that Hong Kong has that maybe other geographies don't have?
As I mentioned, I think Hong Kong is the one of the greatest place that the sort of a bridging between East and West. Also, Hong Kong has a mainland China, the just the behind the front of the Hong Kong, which is mainland China itself has a 1.4 billion. Population, as well as the great adoption of a lot of different digital technologies. So the not only just a Western side but also Eastern side, the Hong Kong would have a great opportunity to leverage whatever they come up with an idea. To test out and quickly from the ideation to a service model.
Well, Andy, thank you so much for joining us here today. And to all our viewers, thank you very much for watching. You can catch the rest of the series and much more at www.fintechf.com and of course YouTube. And also check out the rest of our Hong Kong series as well, where we caught up with Mehdi Swidi over at DBS Hong Kong as well. So thank you all for watching. Thank you very much, Andy, for joining me. And I hope to see you next week on the FinTech Finance Virtual Arena. See you then. Goodbye.